All right, we are live. Everything looking good. Should be ready to roll. All right. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on February 16th, 2022. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So we had a little bit of ordeal with the Federal Reserve, basically amounted to nothing. Had a little bit of an ordeal with, Russia and Ukraine, which has so far amounted to nothing. And yeah, pretty much just grinding on down. Some earnings coming in. Some nice hits and some nice misses. Couple moves up by like 20%, couple moves down by 20%. But overall, not a whole lot of action in the markets. Overall, just kind of range bound. So we do see some potential out of gold as of late. And, silver is kind of lagging behind, but definitely has some potential as well. So we will take a look at that. We'll take a look at the crypto market and what I'm looking at on the longer time frames as well as short term. And then, of course, we're going to take a look at the, regular stock market and all that good stuff as well, including some requests from the trade group. So yeah, let's go ahead and jump right in. If you can hear me coming through, if you would just let me know in the comments. And, of course, obviously, smash that like button. Say what's up. So let's go ahead and get started with the TNX. So regardless of what the Federal Reserve is doing or saying, which of course is nothing, we see that the TNX 10-year Treasury note yield is right here at 2%, 2.046, which is exactly what we've been expected. Obviously, 2% has been our target for some time now. Now that we have reached 2%, we're just paying attention to the potential bearish divergence that is developing. We could easily invalidate that if we continue to the upside, but we know we have reached our main key Fibonacci level. So we've been paying attention to that for some time now. That is just from the top of our 2018 high in November down to the wick down here in the crash in March of 2020. And then, of course, now that's our retrace of the 78.6% level, or the 786 Fibonacci internal retracement. So we now have obviously a bearish dump. We have a bullish retracement that has taken us back up to the 786. The next level for an internal retracement would be the 886. And then if we break through the 886, really if we break through the 786, there's an extremely high probability that we actually break out above this level. And that changes the whole scope of what we're looking at here. So definitely at some key levels. You guys know my opinion on this. We obviously have our measured move in place for the breakout. We have our key levels that we are watching. And then we have our long-term targets to the upside. So we don't need to go over that right now, but we know overall that I am bullish on rates. And keep in mind that this is the 10-year rate moving up to over 2% with the Fed funds rate still at 0. So the Fed funds rate is far lagging behind. So basically at this point in time, they're just jawboning. I don't expect them to do any kind of emergency rate hike. I don't expect them to suddenly jack up rates. The truth is, they're trying to pretend right now like they're still in control. They have completely lost control. The Fed has completely lost control. Right now, they are literally just praying that inflation comes back down on its own. But here's the news. The supply chain has not opened back up. And the issue is clearly the supply chain. You can say it's the money, you can say it's the wealth, you can say it's the money printing, whatever. It's not. It's all clearly supply chain issues. I mean, there's tons of other factors that have contributed to it. But the truth is, they could print as much money as they wanted or as they did. If we were still able to get stuff the same way we were going into this in 2018, 2019, there would be no issues. We would not be seeing this massive inflation. It's literally supply chain and horrible policy. Where's the majority of the inflation coming from? It's shipping for imported goods because we don't make anything here. And, there's obviously issues with energy and transportation. So the main two things that we're having issues with are energy and transportation. Well, why are we having issues with energy and transportation? Well, we fucked up the supply chain and we stopped, making energy ourselves because everybody wants to be like woke and green energy and all this shit. Like, look at all the countries that are having issues with energy. What did they do? Oh, okay. They adopted, a woke new agenda and they shut down nuclear power plants, or they tried to go green energy and now they're having issues. Same thing that happened in the United States. We were doing all kinds of fracking. We had all kinds of, stuff going on with Canada. We had pipelines going on here, there, everywhere. Everything's going great. We're completely energy independent. Biden comes in, first thing they do, open the borders and close down energy, and then meanwhile, what are we doing? We're begging Russia and, Saudi Arabia or, just Middle Eastern countries in general. Hey, we need you guys to release more energy. Please, OPEC, make more barrels. Well, I mean, we wouldn't care about any of that if we didn't just do a bunch of dumb shit. It's the same. I mean, it's the same thing all over the place. The country is being run by no, I'm sorry. I take that back. The world is being run by complete imbeciles that are literally responsible for all the dumb shit that's happening right now. So, I mean, who you get mad at? Obviously, just the people that are in charge. You can say, oh, it's because of the money printing and this, that, and the other. Sure, the money printing didn't help. But the truth is, the velocity of money is so low right now that the money printing doesn't do anything but make up for the gap with the velocity of the money that would be getting spent over and over again, exponentially more if there was still any velocity. So, but you guys know how I feel about that. I don't need to go into deep depth on all that stuff. And if anybody does ever want me to, we can obviously touch on any of those subjects as well. So let's take a look at oil. So we know obviously oil has been operating inside of this ascending broadening wedge. We have touched the top here 3 times in a row. And here we have hit the top one more time. And, obviously looks like we're topping out at least for now. So what we're going to pay attention to is, do we come back down to the moving average? Do we come back down to a key level, which is our previous top from right here? Do we come all the way back down to the bottom of the channel? I mean, we don't really know. We have to wait and let the market tell us. But obviously, whenever we see the sell, buy, and then the sell signal, and then we leave the bullish control zone, that's our top. And then obviously we get the bearish control zone and a hard buy, and that's our bottom. We see the same thing here. We see the top right here. We see the top right here. We see the same thing over and over again. So here when we see the sell buy sell signal at the top of the range, that tells us that we're probably at the top right now. Expect us to come back up, potentially put in one more lower high, and then sell back down. We know on longer time frames like the weekly, we're putting in divergence with each of these tops, and we're putting in divergence with each of the bottoms. So paying close attention to that. Obviously, we can see some divergence here on the daily as well, but the weekly is obviously a little more consequential. We saw that we were slowing down for a little bit, but now it looks like the 200 daily exponential is going to cross back above the 200 simple. So I don't think it's unrealistic that, we come down here and find support somewhere in like the mid 70s to low 80s. So paying close attention to that. Obviously, oil is a big part of, inflation or expenses or, the whole energy trade right now, which in my opinion is very crowded. So got to be real careful with that. Looks pretty toppy, at least for now. So Dow Jones. So we know that the major indexes are basically just consolidating at key support at the 200 exponential and simple. So if we turn off our drawing tools, we see that we're just pinned right here between the 200 simple and 200 exponential, just going sideways. And it looks like we're about to get the bearish cross on the stochastics. We do have momentum in our favor on the TJD, TDMACD for now. I'll have to wait and see what happens there. But we are below the short-term moving averages, the 8 and the 21. They are across to the downside. We are below the 200 simple moving average, and we're barely hanging on to the 200 exponential. So right now, just based on the moving averages, we have 3 things working against us and 1 working for us. Does not look good, in my opinion. Obviously, 200 simple is on top of the 200 exponential, showing that we are losing strength to the upside, losing momentum to the upside, and more than likely we're going to be rolling over. And then obviously, there's lots of fundamental things telling us we're probably at least going to see some sort of drawdown for now. But in the meantime, we're just kind of oscillating around. SPY is slightly more bullish as it did close today above the 200 simple. So we're above the 200 exponential, slightly above 200 simple. But again, we have the bearish cross on the 821, angle towards the downside. And, not really getting much of anything out of this right now. Just kind of holding on to some key support levels, holding on to 200 exponential and simple. Indexes obviously look much better than individual stocks for now. IXIC, NASDAQ, we broke down below that key support here in red. We obviously are well below 200 simple, well below 200 exponential. They both are sloped to the downside or at least flat for now, signaling that we are in fact in a bear market. We have lost a key support line here in red. We have the 8 and 21 cross bearishly to the downside. So as of now, we're slightly above the 8, trying to consolidate here, trying to reclaim key support levels. If we don't, we would expect to get the measure move to the downside, which is from our neckline to the top right here, which would basically just bring us down to one of these other key Fibonacci levels, potentially, or even lower, possibly not as low. We'll have to wait and see. But in the meantime, we're basically just consolidating below support. So if we can reclaim the support, we can try to push back up and get above the 200 simple and exponential. If we do not, we would expect continuation to the downside. As far as I'm concerned, this looks bad right now. Does not mean we can't reclaim these levels and continue to the upside. But overall, we see that the stocks inside of the NASDAQ look like total trash. As always, there's just a couple of them holding up the entire market, or the entire index, I should say. Really the whole market. So Russell is next. So Russell has broken down from our key support here in green. We basically got our measure move breakdown from there. Came down to a key Fibonacci level, the 236 for the macro move from, the March crash to our top back here, which was a failed breakout or a throw over. So obviously after that, we had the momentum to the downside. We have rolled over the 200 exponential and simple, our slope to the downside. At some point in time, we would expect to push back up, eventually to retest the support as resistance, and then obviously theoretically to tag the 200 exponential and simple. That's our reversion to the mean play. Now it is key to know also, or remember, that this doesn't have to tag it right now. We could easily roll over here, fall down to the 382, the 200 exponential and simple, accelerate to the downside, and then get a push back up and only barely get back to the 236, never even touch the breakdown from support, and then intersect with the 200 exponential and simple. That's our reversion to the mean play. It just takes place from a lower level. So we oftentimes will see a retest and then a breakdown and then another retest and then another breakdown until eventually, we start to lose momentum to the downside and then we can curve back up. But it's important to remember that just because we are broken down from a key level or at a key level of support and we're waiting for we are waiting for a reversion to the mean play, does not mean it has to happen from this level. It could very easily lose support here, break down, and then happen from the 382 instead. So obviously, hanging on to this level is key, but in the meantime, we are above the 821. It does look like we're going to try to push back up here to like that 21 level. We are gaining a little bit of momentum, but again, looks very, very weak. By far the worst of our indexes. So looking at XLE, paying close attention to this, we obviously have the breakdown and retest of the 21. Previously, when we had that take place here, now keep in mind, this thing has been in a bear market for like a decade and finally has had a nice little push up here, a reversion all the way back down to 200 exponential and simple in December of 2021, so at the end of the year, and then since then has been going parabolic back again to the upside. Now we've had two retests of the 21 on the daily along the way. This first time when we retested it, it got bought up aggressively and we shot straight back up and then continued to the upside. This time it got bought back up to the 8. But we also have what's looking like a daily rejection candle right now. So, that is definitely worth paying attention to. We've seen now 1, 2, 3 of these, basically like shooting star rejections. Typically that happens right before we roll over. And the fact we were unable to reclaim the 8 on the daily tells me that we're more than likely going to come back down to the 21. And then if that breaks, we'll have to look at like previous levels of support, like that $60 range or $61 range, potentially as low as the 200. This is obviously going to correspond directly with what happens with oil. We're also seeing nat gas has been helping a lot on this, the strength here. But we do see the sell by sell signal, and we have now officially left the bullish control zone on the daily with our blue stochastic. So with the bearish divergence in play, with the exiting of the bullish control zone, with the at this point in time, we've had 6 red histograms and 1 green histogram on the TJD TDMACD. Although we still have the blue slope line in our favor, it does look like we're more likely than not going to be at least coming down to retest like $65 range. But I do think energy will be a buying opportunity. But it's just a matter of identifying a lower level of value area because it has run quite a bit already and obviously had quite a bit of momentum in play so far. I'm not saying that we have lost the momentum completely, but it definitely does not look good as we're starting to see like daily divergence and losing some of these key levels. So UPS, just a proxy right now for transportation sector. We can go back to looking at like XTN or something like that. It doesn't really matter, but UPS is probably one of the stronger shipping companies, or is the strongest chart. So this one has been giving us basically a little heads up on what's actually happening in the sector, but with a little more of a bullish bias, which I still want to have until we start confirming into a bear market with some of the indices, as opposed to just like individual stocks within them. But we did break down below that key resistance. failed to hold as support, and it looks like the 821 is going to cross back down. So maybe looking at another, I mean, we have the gap close, gap fill down here at 202. Looks very likely every other time we've been filling these gaps like crazy. Looks very likely that we'll find some kind of temporary support on the 200 exponential and simple. We see obviously the Stochs are angled to the downside. We see a bunch of red histograms in a row. Looks very likely that we're going to at least retest like the heart line of this range, somewhere around like 202. All right. Let's jump over here. What's up, guys? Appreciate the sound off in the chat there. Good to see you, Comb Concept and Eli. Good to see you as well. That's right. Thumbs up. Let's go. So DXY, obviously still looking good for now. Still kind of just going sideways consolidation. You know, we see like a full-on bullish reset in process right now. You know, we were at extremely high levels right here. The histogram has just trended to the downside. The slope line on this has been red and just trending to the downside, and we see that we're basically just at the same level. We're just going sideways on price action while the indicator oscillators just reset. If we go to a longer time frame, we'll see the same thing taking place. You know, we basically have tried to reclaim the 8 and 21 a couple times, had a little push up here, saw some divergence, expected a sell-off. I fully think that we're going to come back down here and retest the bottom of the range, somewhere around like 94. Once again, of course, everybody will get extremely bearish on the DXY, blah, 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 and then we'll just do the same thing and keep on creeping up. This is extremely, extremely bullish to me on every time frame so far. Like longer time frames, I should say. So Tesla has come down here. We do have a high, a lower, a high, a low, a lower high, and then a lower low. We're at the 200 exponential and simple. We're trying to reclaim the 821. We probably do push back up here one more time. I think we have a channel. Yeah, we basically have like a descending channel type deal in play. You know, I expect this to come back up to the top of the channel. If we get the break to the upside, it could easily take us back to the top of the range. You know, if we fail to break out to the upside, probably just take us back down. I mean, we're at key support right now at 895. The next key support level is slightly below our previous low, so like 771. I expect Tesla to stay strong longer than most other assets do, just because they have a cult following. One, they're actually like doing things. It's a profitable company. You know, there's a lot of good reasons that Tesla would stay stronger for longer. And then obviously we see here the top of our previous little triangle consolidation here is really just our support that we're holding on to for now. So we'll pay close attention to that. And then obviously we have a previous high right here that would be our potential like 760, 770 range. So, but does not look particularly great right now. Probably does come back up and retest $1,000 though. Okay, so going to talk about a couple of these ones that just got wrecked today. So Roblox is obviously one of them. So all right, so it's below its IPO or like listing price. It looks like $65 basically was its yeah, it looks like about 65, and we're down here at like 54 now. Basically just retesting these lows. Obviously the earnings was, you know, not what people were expecting. Previously the earnings came in, it was a disappointment right here, and then it just gapped up massively to the upside, and since then it's just been bleeding value. So clearly in a bear market, below 200 exponential and simple, you know, at all-time lows or retesting all-time lows. I mean, at this point in time, you know, we talk about this all the time, guys, and I know that for anybody new out there, we're going to go through this from the basic. The way I look at a chart like this is we're at all-time lows. So anyone that ever bought this stock is down. There's no winners in Roblox right now. No winners unless you got in before it went public. So literally everyone that has ever purchased this is a loser. Not at life, but at investing. So there's all these people, all this price action, all this volume, everybody that ever bought around here, the people that bought the top, that got stopped out, you know, on a short, all the people that bought the dip, it flipped into a bear market, they bought the dip here, they bought the dip here. Now, literally everyone that has ever bought this stock is a loser. Not at life, not at the game, but at investing in the stock. Everyone is a loser. So any move we ever have to the upside, anybody that decides to buy the dip now after a 25% drawdown, anyone that tries to do anything bullish on this is going to be fighting the other 99.99% of people that are just praying to God that there's a bounce so they can get out of their position. That's how I look at it. Now, talk to me in a few months, you know, next quarter or next half or next year, and, earnings start to come in and everything's going gravy and, it's beating and the market maybe has shifted sentiment, I will completely, reverse my stance if it's justified. But right now, every person that has ever bought this just wants out right now. All the people that bought down here, that bought the dip, that thought they were geniuses on the way back up and were expecting that reversion to the mean play back up to like 83, 84, and they thought, oh, I got it at 50, it's headed up to 80, I'll be up 50%, I'll take half off the table then, or I'm going to take profits then, or I bought the bottom and it's going to new all-time highs. All those people right now are wrecked, either right back to where they bought at or lower. So literally everyone just wants to get out of this stock right now. Everyone. Like, I mean, I'm sure there's people that are like, I'm buying the dip, double dip, last chance to buy before new all-time highs. Those people, there's for every one of those people there's 9,999 other people that are just praying to God for an opportunity to get the fuck out of this stock. That's how I look at a chart like this. So in my opinion, when somebody asks me, hey, is it a good time to buy after it have a 25% pullback? No, it's a horrible time to buy because it's at all-time lows. Everybody that ever bought this is upside down in it. And no matter what company this was, it looks like shit. That's how I look at it. So now, that being said, if I was going to look to try to pick bottoms or something, all I would do is I would just go from, our initial low back here, and then I would go to the high right here with the Fibonacci, and then I would look for Fibonacci extension targets to the downside. So we already know we're lower than when we started. So, obviously we went into that for the last 5 minutes. So I don't need to reiterate that. So the next areas to look at is obviously a retest of the low, which we already did. So maybe it bottoms here. It's possible. It bottomed here once. So maybe. I doubt it though. I doubt it. I think key levels to look at are, and you guys know I put different weight on different, Fibonacci extensions. 1.618 is my actual target that I like to pay attention to for potential targets for something to top out to the upside or bottom out to the downside. So the 1.618 is the key level that I'm looking for. Now, it doesn't have to get there. Maybe it gets swooped up to the 1.5, maybe at the 1.382, possibly at the 1.236. In my opinion, the 1.618 is the level to hold out for. Does not mean we don't come down to the 1.382, come all the way back up to like 54, and then go lower to the 1.5, and then come all the way back up to 44. And I mean, you guys know Slinky Theory. It's, stair-stepping its way to the downside. So that's the area I would be looking for if I was going to try to pick the bottom. And I would do it based on multiple things. I would do it based on divergence. I would do it based on like a capitulation looking candle at the bottom. So I would want bullish divergence. I would want a bunch of volume all of a sudden after a huge dump. I would want a giant red candle that just looks like murder. I would want all those things, and then obviously corresponding with one of those key fib levels. That is what I would be looking for if I was going to pick the bottom. I don't like to pick bottoms on things, and when I do it for scalps, not for positions. Sometimes they will develop into a position, but with something like this, if I end up in a scalp and it looks nice, like this drop right here, I cannot get out of that position fast enough. I cannot take those profits fast enough. I cannot turn those paper gains into actual money in my account fast enough. But that's just me. Not everyone's going to feel that way. Obviously, the retest of these key support levels right here were a pretty good place to exit. Obviously, quite a few people saw the weakness there. It looked like it was going to break to the upside and then never got to the reversion of the mean play. Obviously, you know how I feel. I mean, I can't say anything more about that. I've been pretty clear. And, I know that people look at these things and look at it as value, and now's a good time to buy. Let's look at Viacom now. So obviously changing their name to Paramount. Yeah, Paramount. I think the ticker is going to change too. Obviously, once again, had a like 20% just gap down on earnings miss. Last time I had the earnings miss, it just kind of like bled out for a little bit. Retested those levels twice. Very clearly in a bear market. This is also extremely hard to value because of the whole situation, with the family office blow up, and we don't know what the real value of this really is. We really don't know. I mean, this high might never be reached again, this $102 level, because it was essentially like, illegal stuff made this happen. And, there's a hedge fund blow up, and now a lot of people are burned and upside down in this. So again, we don't know if it's ever going to get back to those levels again. We do know it's confirmed in a bear market. We do know it looks terrible right now. We do know, looking at this chart going back a long, long time, that we don't see a bunch of earnings misses. We see only a couple. And now here, all of a sudden, we're seeing, a couple in a row. So something is going wrong here. Something is not working the same way that it was previously, because we have tons and tons and tons of beats. And then here's a miss, and then a couple beats, and then here's a miss. Obviously we know what was going on through this period right here. Obviously the miss right before the capitulation, and then beats all through, and then the hedge fund family office blows up, obviously, and then after that a couple more beats, and now here we have 2 misses in a row. So what's going on here? What's wrong? I mean, I don't know. I haven't looked into this enough to know exactly what's going on, but I'm not going to get overly ambitious on something like this for a bounce back to the upside. So if I'm going to buy something that has like a 20% capitulation move, I have to figure out, why did that just gap down 20% or 25%? Same thing with Facebook. People are like, oh, Facebook is a buy. Then Facebook drops 25%. And then they're like, okay, now it's definitely a buy because it's 25% cheaper. Well, I mean, is it 25% cheaper now, or was it overpriced before and now it's just fair value? I don't know. Was it overpriced before and now it's fair value, or was it really overpriced before and it's still above fair value and it's got to drop another 25%? Is it going to ever go back to those prices again? I mean, that's all stuff that we have to figure out using, fundamentals and earnings and potential future earnings and, valuations and all that different stuff. We can look at PE ratios historically. We can look at all kinds of different things, management, all that's great. And we can figure out the overall determination, like direction of those companies. But just looking at the technicals, when I see something like this and it has a 25% gap down and it goes to a new low, it doesn't look good to me. I mean, we're not making new all-time lows, but we're seeing something has changed here. Obviously, we had a big family office blow up. Obviously, we're in a bear market. Obviously, we see 2 misses in a row for like the first time, going back for years. Here we saw it happen back in 2009. We had a couple misses in a row, and that was like the bottom. We also had an inverted head and shoulders. So I don't want to get too excited about that. Maybe if we take out this low, we see something like that, we'll start paying attention to it. But for me, this doesn't look like a buying opportunity to me. I would much rather be buying something that's strong than buying something that's weak. I mean, we had a nice play in this. We had a reversion to the mean, 200 exponential and simple retest, and now we expect continuation to the downside. This looks like, to me, a hard rejection double top. So we made 20-something% on the way up. We get the fuck out of the way, and now we just sit there and let it drop. We could easily take that money and put it back into it and just forget about it, but let's do it from a much lower price. That's how I look at it. So for me, no, these are not buying opportunities. Is it possible we find support right here? We have, a top right here. We have a bunch of consolidation, a top right here. We have a bottom right here, a bottom right here, a bottom right here. And then here we're at it. Is it possible this is the bottom? It 100% is possible this is the bottom. And we just start going back up from here. That's totally fine. But there's, in my opinion, the risk-reward ratio is not there right now. If we look at our Fibonacci from the bottom to the top right here, and again, we have to be careful about the validity of this because, this is a family office blowing up. So we don't know how much inflated this is. We don't know how much of this will ever come back or if it will ever come back. So I'm extra skeptical on a chart like this. And normally I'm all about technicals, but on something like this, I consider the technicals to be much less reliable. So we'll see what happens. But, the 618 is down here at 24. So I think that's a viable target. I mean, that's another, 20% to the downside. We could easily go much lower than that. So for me, it's not a buying opportunity right now. I don't mind looking at these things and I don't mind explaining myself. So this is by no way discouraging anyone from asking questions, group members from asking me to look at assets like this, but I would much rather talk it through and give you my actual explanation why this to me does not look good. Now, if we were in a bull market and something crazy happened and we just got a 20% drop, maybe then on something like Nvidia, it's like, oh, it's a buying opportunity. Like Nvidia looks great and this was just an overreaction, or, cascading stops or something like that. But that's not what we're seeing right here. This is very clearly in a bear market. This was very clearly a rejection. And this is one of my favorite plays is that reversion to the mean on the upside, and then what happens afterwards? We take profits, we get out of the way, and then look out below, because usually we see a cascading waterfall right afterwards. So that's what I expect, a cascading waterfall, first down to like 24, and then probably after that like 1650 or something like that. So speaking of NVIDIA, let's take a look at NVIDIA. So obviously NVIDIA broke down from those key levels. We came down, retested, hit our key area, the 200 exponential and simple. Hard buy coming out of the bearish control zone. Bunch of green histograms. We're back above the zero line, back above the slope line, and these Stochs are powerfully angled to the upside. We have the cross on the 821 back up. It looks like we are very likely going to be retesting that 291 range. Another 10% to the upside. So looks good short term for now. I'm not convinced that semiconductor space has not already topped out. Obviously, NVIDIA had nice earnings come in and basically got nothing out of it. So what are we seeing right now? We're seeing that when companies beat earnings, some are getting a crazy 20% jump to the upside, like DoorDash and stuff like that. Legit companies like NVIDIA that have been strong are getting nothing, or maybe a couple percent. And then misses are just getting absolutely wrecked. So for me, I'm not trying to like speculate on something right before earnings unless I have like some key metric that I'm able to identify, etc. So we saw a 7% surprise on the earnings, on the EPS, and we saw a 3% surprise on the revenue. So I mean, nothing crazy or great, but overall, I mean, not bad, honestly. Considering this thing has just been on an absolute tear. So, but is this a great value where we're at right now? No. If anything, I mean, I would be looking at it as like just a quick little scalp for like a 10% retest of like that 291 level. And I don't even know that we'll get there. I mean, there's a lot of other things we could pay attention to on this. Assuming that we just ignored everything else and we were just looking at NVIDIA, let's say, we're basically looking at some kind of, resistance along these lines. I mean, depending how we're looking at this, I would say probably something along these lines roughly. This is probably what I'd be paying attention to. We see pretty clear bounces on the heart line. We obviously see some resistance at the top of the range. We see a bottom of the range support down here at the 200s. Again, reclaim the heart line, retest the top of the range. So if we do get a breakout to the upside, it probably takes us back up to retest all-time highs, because our measured move would be, basically from the bottom of the channel to the top of the channel. Assuming we just broke out now, it would basically just look like a potential double top. We obviously have one key area right here, and then at that point in time, if we broke through that consolidated, I think we retest the highs. But we're also at resistance right now. So it could just as easily roll back over, consolidate, and then capitulate to a new low. So, I would much rather be buying, green box areas at support after a sell-off than trying to buy a potential breakout, in what more than likely we'll just consider to be range bound in a descending channel or broadening wedge. I mean, depending, you could draw this a lot of different ways. Honestly, you could draw it as some kind of like wedge support like this. And this is basically, we're operating inside a descending broadening wedge. And then again, we could break out to the upside, probably be around the same measure move. But then afterwards, do we just double top? Do we consolidate and then go higher? Do we roll over? I mean, we just have to wait and see. I'm not convinced that semiconductors are not topping out here. So Apple, and obviously the reason I'm looking at these particular stocks now, NVIDIA, Apple, Amazon, Google, and Microsoft, is they are literally like the top performers. What's like holding up these markets. They have huge weightings in the indexes, and then also, massive like multi-billion dollar / trillion dollar companies. So they're the most important. Of the growth stocks, at least. So Apple, obviously just consolidating here, reclaim the 821 for now, hanging on to it. I still would not put it out of the cards that we come back down here and retest our red support. Does it hold? I mean, it looks like right now, this thing doesn't look particularly great. It looks like it's ready to roll back over. Now, again, if we consolidate here for a bit, maybe it has another push to the upside. But, I mean, we're seeing already, we're at pretty high levels. We could easily get another push up here. But then I would really be paying attention to potential bearish divergence. And again, like same type of thing, I would be paying attention to like, are we putting in some kind of like descending channel or broadening wedge? Like what's going on here? So I would be looking at it something similar to what we're seeing here. So, and obviously there's a lot of indecision in the markets. Valuations are extremely high. Interest rates are definitely going to be going up, probably very, very slowly if the Fed has anything to do with it. Amazon in a bear market, been consolidating in this range forever, had 2 failed breakouts, double top right here, came all the way back down to the bottom of the range, had a failed breakdown, but now here we are at the heart line of the channel. I really do think that, we got the reversion of the mean, and then we closed down below the heart line again. I know I did say that I was looking for the price to come all the way back down to the channel, and I was waiting for it, but the truth is things have changed a little bit. Now, granted, if you took that buy down here that we were waiting for, you did great because you're already up, 11% on that. But I would be looking to get out of it because, we're in a bear market now. It was different when we were talking about a breakdown here and we still had the 200 exponential and simple in our favor when I put this trade setup potentially in play. Now we have lost the 200 exponential and simple. We had a failed breakout to the upside since then and a double top. So now to me, this trade doesn't look nearly as juicy. Now, obviously in hindsight, sure, we should have still took the trade. But, you guys know me. I like the easy stuff. I don't like to work hard. I've spent all this time inflating my raft. I've got my case of beer and I'm ready to just float on downstream with the current. Okay. I'm not, maybe if I have to, I'll jump off the raft for a minute. I'll swim around to get a little exercise and then, I'll flip over so I don't get sunburned. But I don't like to work real hard. Let's be real here. Okay. So for me, there's way better potential situations, setups, trades, investments, whatever. I like Amazon as a whole, but right now, this to me looks like it has a bias to the downside. It's technically in a bear market on the daily, and it's getting rejected at the heart line. I think that at this point in time, that Amazon is more likely to break down from this level and hit 2,300 than it is to break back up to the upside and hit 3,500. Now, can I be wrong? I definitely can be wrong. I can definitely be wrong. But if we look at this the way I look at it, which is risk reward, and probability of success, if it's a 50-50 that we come back down and we break to the downside, or maybe there's less of a chance we break to the downside. If we look at it, there's potential of 11% potential to the upside, if we go back to the top of the range, and there's 27% downside potential. Now, maybe we just come back down to the bottom of the range. Well, what is it then? 12.5% versus 9.6%. So it's even Steven. So there's no trade there for me. The actual trade for me is if I was going to take a trade from this level on Amazon, I would take the other end of this. I would take the other end of it. I would take the short off of resistance and the likelihood that we actually break down from this level, and then we're looking at 2.5 risk reward ratio. So we flip a coin. If we're right, we get $2.50. If we're wrong, we lose $1. That to me looks like the trade. Now, maybe it keeps going to the upside. Maybe we get to take the trade off the top of the range. Maybe it's better then. But you know what? I mean, this is, if there was a trade here, this is the one I would be looking at. So, but again, I don't have conviction like powerfully. And obviously Amazon is a strong stock. It has done nothing for, so long at this point in time. Since June of 2020, it has done nothing. It has went sideways forever and trapped a bunch of people here, trapped a bunch more people here. And if you don't believe me, go back and look at these dates and watch CNBC or Bloomberg or something and see what they're telling you. This is it. Amazon's been consolidating for a year and now it's breaking out to the upside. Price targets of 5,000, 7,000, 10,000. Well, those people are all trapped now. They're all dumbasses that are trapped. And now they're all down, 15%. So I'm not going to be one of them. I'm not going to get trapped. Now, it does not mean that I would just go selling my Amazon positions in my long term, but those are also from a much lower level. So there's definitely a distinction between a long-term investment in Amazon. Because for me, I think Amazon is going to be like what's that movie, Idiocracy, in the future. And it's like they have giant warehouses and all the dumbass people go there. And that's the only business that's still in town. All of retail is dead. And it's just a giant Amazon warehouse where they have a bunch of couches and there's trains that drive you around. That's exactly how I picture Amazon in the future. And if you're too lazy to go to the giant Amazon stores, the distribution center or whatever, you know, the drones just deliver the Amazon shit to your house. So long term, I'm the most bullish on Amazon. It looks great. You know, assuming that the governments don't like grow some kind of brain and decide that, you know, it's probably not good for the future if we have like 4 companies, you know, and that's it. But so far it looks like they're paid off pretty well, and that is our future. But anyway, aside from my philosophical views on humanity and the corruption in our governments and corporations, on to Google next, which I obviously love. Thank you so much, Google, for allowing us to be here today. This stream is 100% brought to you by Google. So thank you, Google, an Alphabet company, and of course YouTube as well. You're great. There's definitely no censorship whatsoever going on, and I'm very happy to be here. So that being said, so obviously we saw this massive gap up, you know, retest of the highs, and what happened? Well, it looks to me, the mentality behind this move right here to me was, oh, the earnings comes in, let's gap this thing back up and then get the fuck out of this position because the market's going lower. That's what that looks like to me. Now, am I going to be right? We'll have to wait and see. But we put in a high and then we put in a new low that took out our previous low after consolidating this range for a while, and we broke down below 200 exponential and simple. So when I see this get pushed back up here, gap up on earnings like that, and then, you know, say, hey, let's be careful here, and then it just completely bleeds back out, that tells me there was enough volume to push this back to the upside, enough buying, enough interest to push it back up to new all-time highs, or at least to the previous all-time high. And then from then, there has only been sellers. So I don't think all of a sudden we're just going to see a bunch of buyers come in and they're like, oh, thank God, we came back down, filled the gap, and now we get an opportunity to buy here because we're definitely going higher. Because I would just assume that the same thing's going to happen. We're just going to get sold into, and then finally break down. So Google, to me, does not look particularly good. Doesn't look nearly as bad as most things, but it doesn't look particularly good. So Microsoft, you know, again, Microsoft here basically just looks like it is filling out our head and shoulders. Now, I like more symmetrical looking patterns. So I don't love how this looks. I could easily see this whole pattern right here being the head, and we've already put in a left shoulder, and then we actually end up coming back down here, and then we put in a right shoulder, and then we break down from here. Maybe it gets invalidated. We just chop around for a while, and then we go to new all-time highs. But we have basically filled out a head and shoulders at this point in time. We have a clear support at the 236, which is basically confirmation that we've topped out this Fibonacci from, you know, the capitulation, you know, March event, the CVD event, to our all-time high right here. So Microsoft, to me, looks like it's trying to break back above key levels, and it failed to do so. And now it's barely hanging on to 200 exponential and simple. The slope on them is basically flat. So at this point in time, it seems likely we're coming back down to revisit the lows. Now, what happens when we get there? Does it get bought back up? Do we come back, retest the 200s and get rejected and then go much lower? That would be my guess based on what looks likely to happen from here. I think it's very likely that we retest 278 and then after that, like 242. Now, maybe we do it in after hours or pre-market in a gap down. I don't know. Would it be a buying opportunity then? Well, maybe, because this is still technically in a bull market, you know. So, but again, we got to see how it looks. We got to see when it happens. We got to see what the actual overall look of the market looks like. But I would rather buy something like this that is still bullish and on all-time highs and been performing extremely good on like a crazy gap down, like 20% dump or something like that, than some trash that is literally at the lowest low that it's ever been and no one has ever made money on it. Anyone that has ever bought it is upside down. Just to reiterate my point from earlier. So let's jump in the chat and see what people have to say. And then we're going to look at our commodities and we're going to look at our cryptos. What up, y'all? Sound off in the chat. Make sure you smash that like button. Any questions or anything so far from what we've been dealing with? If you are just tuning in, remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. I'm not going to take a break. Just going to keep ripping on through. So I know there's a slight delay. So I will look back over and see if anybody did have any questions or anything. So let's pay attention to gold here. So gold did exactly what we've been talking about. It came back and it retested that key level. So obviously we got the breakout of our, you know, descending resistance here in pink. We're at the 0.5 consolidating, which is our previous high, and then also a key Fibonacci level from the high to the low. That's the 50% retrace. Previously, we were topping out at these various fib levels, but since we hit the bottom, we came up to the 618, we came back down to the bottom, we came back to the 0.5, we came down and we put in a series of higher lows now and a series of lower highs. But now here we are retesting this previous high. So what are the two case scenarios that I could see happening right here? Well, the bear case scenario is this pushes up, gets rejected, rolls over, and traps people because they think we took out this high and now everything's bullish. They think we broke out and now everything's bullish, and then they just get trapped. That's the bearish, scenario. And then what happens? We probably just revisit the lows. What's the bullish scenario? Well, the bullish scenario is this is a legit breakout. We start to see consolidation, and then we move up to 618 next, 1910. And then after that, we consolidate again. We move up to 786. And then at that point in time, probability has it that we break to new all-time highs, retest the highs, consolidate, and then we see, basically like I think I have $2,600 gold target. 1.618 would be 2,400. Depending how bullish and how crazy you want to get. Like we can get up here. It's like the measure move of like the the lead in. So somewhere between 24 and 28, we'll call it 26. But, obviously we have stair steps on the way up the same way we have stair steps on the way down with like Slinky Theory. So, but we do have to be very, very careful because this is the exact same signature that we see happening. And that's why we've been paying attention to this on the weekly. This is the exact same signature we see happening at our previous 2011, 12 all-time high. So we came up, put in an all-time high, consolidated around the range, break out from a descending pattern. It looked like a descending triangle. So it looked like a bearish pattern. Then we break up and retest those previous highs. And then we roll over and go extremely bearish. So I would not be surprised to see, we've basically been consolidating at this area slightly more bullish because it's more of like a flag pattern or a symmetrical triangle than a descending triangle. We don't have that same flat bottom. We have basically a low and then higher lows. We have a high and then lower highs. So this is more of a neutral pattern with a, bullish lead in. So at this point in time, a move back up to like this 1900 level and then this rolling over would look very similar again. And then that would start to look like, a descending triangle as we would have a high and then a low and then a lower high and then that same kind of low again right here. And then again, that same high or a lower high. And then we come back down and I would expect once again, a push back down to like 1660, which by the time we got there would line up with 200 exponential and simple. So I do like how gold is developing. But again, the truth is with gold, if we buy right now and we say, this is it, I'm sure I'm buying right now, versus if we buy when it gets a new all-time high, we're talking about a 9%. So would you rather front run a new all-time high by 9%? Or would you rather be much more confident once we get to a new all-time high that gold continues to the upside and goes back into a parabolic bull market? Me personally, I would rather pay 9% fee to be sure that we're going to new all-time highs. But that's a choice that each and every one of us has to make. For me, I will pay 9% gold tax because if we do break through that, gold probably goes to much, much higher prices. And inflation is probably out of control, running rampant. God knows what the world looks like. We're probably all at war. I mean, supply chains probably broken down exponentially worse. Energy is probably so expensive that, people are like freezing to death and can't afford gas for their car. I mean, I don't know what the, apocalyptic Mad Max scenario looks like that gold continues to go to all-time highs, but we probably go into like a recession or depression. Central banks all over the world start printing money again. There's riots in the streets. I mean, I don't know. I don't know what it's going to look like, but it's not going to be pretty. But again, I can comfortably say I'll pay a 9% gold tax to go to new all-time highs because I already have gold and silver positions. If I didn't have a gold or silver position, would I right now allocate 5%? Well, I mean, I would be much more likely to just go ahead and start dipping my toes in the golden fountain, so silver looks much worse. It looks much, much worse. Silver has basically been just trading in this range forever, and it's still very much in a bear market on the daily, and it's still very much putting in lower highs on the daily. And we're just at the bottom of the range, and it's just slowly just squeezing and getting tighter. So if gold breaks out to new all-time highs, silver probably follows. Maybe it underperforms at first, but I mean, if gold breaks out to new all-time highs, I would expect silver at $30 very, very quickly. Very, very quickly. So maybe it all of a sudden plays catch up and then gold overperforms it and then silver, eventually overperforms. We'll have to wait and see. But right now, the silver chart does not make me bearish, or I'm sorry, does not make me bullish on gold because silver looks like total trash right now. So I know that the monkeys or the primates or, the silverbacks or whatever are rallying up and they're going to do another squeeze soon. Let's just remember that they live in their parents' basements. So let's not give them too much credit here. So I would just focus right now on actual technicals and worry a little bit less on, the little silver squeezers. I mean, they're still eating their yogurt from a tube. So I don't give them a ton of credit. No offense. No offense. You guys know I love silver and gold, but chart does not look particularly good. So gold silver ratio, XAU to XAG on the weekly right here, again, is telling us the same thing. So we see gold potentially wanting to break out to new all-time highs. We see silver looking much worse. We see here we're retesting and we have reclaimed between the 200 exponential and simple, and the slope is potentially flipping back over bullish. So what does that tell us? It tells us right now it looks like momentum is in gold's favor compared to silver. So what do we know about gold? We know that when we go into a downtrend, gold holds its value better than silver does. We know when we go into an uptrend, gold tends to overperform compared to silver. So we know if this breaks out to the upside, it tells us nothing. That gold is either holding its value better and we're going down, or gold is gaining value faster and we're going up. So if anything, I would say right now, this chart gives me a slight bias. If gold starts to outperform silver, it gives me a slight bias that we're probably not breaking out to the upside, that silver is probably breaking down and gold is probably, still in that range. Now, can that change? For sure. I still think very much, though, that we head back up to like 90. Now, at 90, is that probably the top? In my opinion, yes. We'll have to wait and see. A lot can change before then, but you guys know that I essentially think that we're in the middle of an A, B, C correction. My target is the 0.5, which is like 90, 91, somewhere around there, which is also our previous high right here. And that Fibonacci is drawn from the top here to the bottom there. So, but you guys know I'm very, very bullish on silver long term as a commodity, not as much as a monetary metal, but my target to the downside is eventually 42. So if we go up to 90 right here, and then we stop buying gold and we start buying silver like on the way down, by the time we get here, the silver is probably doubled in value in comparison to gold, regardless of what happens in the rest of the markets, which probably, if silver goes into a massive bull run, if silver puts in new all-time highs, it's probably extremely, extremely bullish. So if gold all of a sudden, doubles in value and goes to, 3,500, silver is probably back at like $50 or something like that. So silver juniors, basically getting that second, third retest now of the 200 exponential and simple. Still no closure, and honestly, it probably looks like we're going to roll over. I mean, this is just, now granted, this is very heavily biased towards First Majestic. I can't remember what percentage of this is made up with First Majestic, but I want to say it's like 40% or something like that. And then also First Majestic has kind of branched out into gold as well. So SILJ is actually like mostly silver with a little hint of gold as well. But looks bearish still. Very much in a bear market. GDXJ, again, just gold juniors just still getting absolutely crushed. And we're seeing that some of these gold miners are doing extremely well right now. And GDXJ is still just range bound in this descending channel right here. So, and again, the top of the channel is also the 200 exponential and simple moving average. And we're very much in a bear market. So all the people that were like, oh, I'm going to take the leverage play on gold instead of just buying actual gold, well, those people all look like morons now because gold is up at its previous all-time high, 8% away from the all-time high. But we know GDXJ right now is 54% from its all-time high. So all the people that didn't just buy gold and bet on gold miners, those people are all dumbasses. They all look like absolute morons right now. They have lost half their money compared to if they just bet on gold. So the difference between buying gold versus speculating on miners, well, it's about 46% negative if you speculate. So now if gold breaks to new all-time highs, Miners, we break out, we get the move, measure move, we retest 55, we go to all-time highs. Gold miners outperform. Sure, definitely. Would I rather own gold miners in a parabolic bull market than gold in a parabolic bull market? Yes, I would 100% for sure. But is that what we're in right now? No, we're in a very clear bear market. So anybody that's been buying miners and buying the dip, I mean, they've been brain dead so far. So far, all they've done is make poor decisions, poor investment choices, and, lose money. Now, is now the time to buy, though? Is this the time? Well, we have to wait and see. And again, same thing. I'm dipping my toes in these miners now. But remember, when did I get bullish on miners? Beginning of 2022. So where were miners at the beginning of 2022? They were lower than where we're at right now. This is where miners were at the beginning of 2022. So all the people that were bullish, for the whole last year plus, were all wrong, except for this little bit right here. So it's not about being right about the overall trend. It's about being right at the right time. So we'll see what happens from here. But we just want to dip our toes in. We just want to start building positions from key levels. We don't want to just say, okay, I'm all in on gold miners now. If you have to have a gold position right now, the position should be in actual gold as a store of value, not as an investment that's going to get you rich, as insurance against a failure in the system, schmuck insurance, whatever you want to call it. And then, we can double down on miners once we get a breakout, once we're back above the 200 exponential and simple moving average. Again, it's not about being in the right spot. It's about being in the right spot at the right time. That's how I look at it. You can do whatever you want. If you want to lose 54%, you can do that. That's your choice. And this is obviously not financial advice. But me personally, I would like for you not to lose half your money. But again, I don't know you guys. So if you want to lose half your money, that's your choice. So COPX, just copper miner ETF, basically just been going sideways forever. As far as I'm concerned now, it looks like we're probably going to come back up here and retest the highs. We've been putting in slowly higher lows and slowly higher highs. So as far as I'm concerned, this looks good. It really does. And it's been going sideways at this point in time for so long. We probably have a little something like this going on here. Now, overall, this probably gets back up here, double tops, and then rolls over. That more often than not, that's what we see happen. We'll see a blow off top like this. We'll come back down, consolidate, and flow back to the upside. And then eventually, this will break to the downside. Now, it doesn't have to happen. It's all probabilities. We did reclaim the 200 exponential and simple. If this crosses back over to the upside, it probably does look bullish. But if I had to guess what's going to happen on copper miners into the future, not based on like fundamentals of what I think is going to happen in the world or whatever, just based on this chart pattern and what usually happens here, we probably come back up here, retest the highs, double top, and then this rolls over. That's my guess. But, I would give that a 65% probability. Uranium, again, I love uranium. I've been bullish on uranium forever. We were positioned on uranium in 2019, beginning of 2020. It was a great position to have. But look, we had the triple bearish divergence on a bunch of these uranium ETFs, miners, etc. And that was it. I'm not looking to jump back in now. We're below the 200 exponential and simple. They look like they're rolling over. We're seeing some potential bottoming patterns happening here, but I'm just not, the risk reward ratio is just not there for me. I would rather sit on my hands than just, get impatient and lose a bunch of money because of it. This is what I see happening right now. We're at the top of the range. We have resistance from the top of the descending channel. We have resistance from the 200s. More likely than not, in my opinion, we put in a new low before we put in, a breakout. Now, if we do get a breakout, we can reevaluate. We can look at that. I do always still have some uranium in my portfolio. So again, if I didn't have any uranium, would I be looking to add at these levels? Sure, I wouldn't mind a small position or starting to dabble from key levels. We could easily reclaim the 200 exponential and simple. We could easily continue to the upside. But let's keep in mind, uranium is just so slow. If we're about to go into a bull market in uranium, we got 20 years of opportunity to buy it at a good price. So a couple weeks, couple months for just a little direction to see, do we reclaim the 200 exponential and simple? Do we start creeping back to the upside? That looks a lot juicier to me than just jumping right on this right now and then, losing 30% because we were impatient. THCX. Okay, so this is just cannabis ETF. Instead of just looking at like all the cannabises, I just pulled this one up. Again, it has a bunch of like the key cannabis ones. Again, building positions in cannabis. You guys know how I feel about cannabis. 2022, I think that miners and cannabis, it's going to be their year. Does that mean we don't put in a new low? Not at all. We could very easily still put in a new low on gold and silver miners, on copper miners, not as much on copper miners. Gold and silver miners, we could easily put in a new low. Pot stocks, cannabis stocks, THC, CBD, the whole space in general, we could easily still put in a new low here. But I do like that we're flipping the 821 back to the upside. We did get a little false alarm here and then got wrecked since then, though. We're still very much below the 200 exponential and simple. We could still very much see this go way lower. And if we put a Fibonacci in place from our bottom right here to our massive blow off top right there, we see that we're bouncing the 886. So, what is the 886? Well, it's the last resort. It's the last fib level that I use. And typically, the truth is, with the 886, typically, once you break the 886, you go to new lows or new highs in either direction. The probability of a legit bottom or a legit top and then reversing back in the opposite direction on an 886 is very low. It's very low. So in my opinion, the fact that we came this low tells me that there's a high probability we still either double bottom or go lower. Now we'll see. It's still early in the year. You guys know I think 2022 is the year of, the cannabis stocks and the miners. But, that's just a theory. That's a direction. That's an idea that I have on where money is going to flow to because of taxes, because of beaten down prices, because of, this, that, and the other that I've said a million times. Does not mean that I have to be right, but I'm building a position slowly. And I think that's the important thing to do. So lumber, nothing has really changed right here. We know we're just getting a bunch of limit downs and limit backups. We're just paying attention to, do we take out this high right here or do we just end up with another lower high? And then we obviously have, our previous high right here. And we see where basically, as of now, it looks like a double top at the 786. We'll have to see. If we push up here to the 886, we probably go to new all-time highs, just like what I was saying. Obviously, the key level here was the retest of 200 exponential and simple. And I said if we bounce that, I expect us to go all the way back up here and continue to the upside. If we break through it, I expect us to come down to the 382 and retest that level as well. So, but obviously, as of now, we're very much in an uptrend after a strong downtrend. And, it looks like we're probably going to got to give the bias to the upside here. So let's take a quick break and then we will do some cryptocurrencies. So if you have any questions or crypto asset requests or anything, post them in the chat. I'm going to grab a drink and we'll be right back. Right. M. Hoff says, great content, man. I appreciate the kind words, my friend. And asks, since I'm a new watcher, everything has had a feeling of... Wait, did I read that right? Hang on. Since I'm a new watcher, everything has had a feeling of could go either direction, which is, I guess, always technically the case. What, when was the last thing you said, buy it now, do it, do it, do it, buy it, do it? What was the last thing? Hang on one second. I obviously don't, sorry, I had to block a bot. Obviously do not give financial advice and tell people buy anything now, do it. But I typically will tell you what I'm doing. And we are at a strange spot right now just because one of the key things I use in my technical analysis and trading is the 200 exponential and simple moving averages. And we are very much at or either slightly above, slightly below, or just at those on like, I don't even know, 90% of assets right now. So the last like real positional trades I've been taking was on like the bottom of crypto before our little breakout to the upside on like Bitcoin and a couple other like random little shit coins or altcoins, whatever you want to call them. And then obviously like lots of like positional trades. But right now, you know, there was a couple little pot stocks I was dabbling in. But right now, honestly, I think this is the best time. If there was ever a great time to just sit on your hands and not just throw money at the market, I think now is that time. But that's just my opinion, you know, and that's what I'm doing. But, you know, I also don't have an immediate time frame where I need to make this much by this date or whatever. So I can sit around and wait for like a little bit of resolution and be comfortable with it. Like for me, I will gladly pay like confirmation tax is what I like to call it. You know, I will pay the price of waiting to make sure that the position I enter is a highest probability of success. So that is, hopefully that answers your question pretty well. But crypto, I guess, would be the last. We did buy the dip pretty aggressively after the rejection of lower prices. Consolidation right here. Looked like it could go either way through here, but on shorter time frames. We did enter on the 8 and 21 play on the 4 hour, which if we just switch over to that, we had the 8 and 21 breakthrough right here, and then above the 200 exponential and simple. We took some profits actually at the pushback up to the 200 exponential and simple for the possibility that it would get rejected and go lower. But, you know, obviously it looks like for now, at least we're consolidating. So I'm not overly bullish on crypto at the moment, to tell you the truth, as we have already basically had the reversion of the mean play for the most part. So here is CME futures chart, obviously. And on the futures chart, we have already retested the 200 exponential and simple. So the typical play I look for is the reversion to the mean and then buy the bounce off of the 200 exponential and simple while they're blue on the TJD master. And then if we break down from those levels and they flip over red, like we see here, that means I want to be selling those positions. So this is a counter trend trade to me. And that's what I call the reversion to the mean trade, which is essentially the mean is the 200 exponential and simple moving average on the daily. It's the average price of the last 200 periods, which in this case, obviously the daily chart. So I expect it to push back up, attempt to break through. If it fails, I expect continuation to the downside. If we reclaim those levels and they flip back over blue, you know, there's high possibility or probability of continuation to the upside. But as long as that's what this indicator does. This is the TJD master. You know, it's free for group members. It's something that I give obviously just to the group, as well as the Jewel Thief down here as well. But the goal, the purpose of this is essentially just when it's blue, you know, we're in a bull market. When both these are blue, once the darker colored blue, not the brighter blue, once the darker blue is on top, it means we're running out of steam and probably topping out soon. Once they flip over red and pink, respectively, we're probably going to break down from them into a bear market, at least on a short term. And then inside of that, I use the 821 cross to the up and downside to like make scalp moves. So obviously, once we're on top of the 200 exponential and simple, you know, when they flip green, that's a beautiful scalp move to the upside. When they flip red, we want to de-risk. And then again, we're still bullish here. And then this is, we re-enter right here off of triple bearish, we exited off of triple bearish divergence. We entered off of triple bullish divergence. We rode it up right here. We got back out of our position. We rebought the 200 exponential and simple on the 821 cross here. And then again, we took profits and got back out of this position around, it was actually around like 64,000 or something like that. It was slightly different on the spot market chart over the futures chart. But now, obviously sitting on the sidelines for the majority of the downtrend, or short, or, net negative, or whatever you want to call it. And then obviously we have our reversion to the mean play from here. If we can break back up to the upside and start flipping these back low over blue again, I will gladly get bullish again and look for new all-time highs. But in the meantime, I have a bearish bias because we're below the 200 exponential and simple, and they are both, in fact, red and pink respectively. But we are picking up some momentum on the TJD, TDMACD. We are technically inside the bullish control zone on the Jewel Thief, but it looks like we're about to get rejected and leave that area. So once we leave that area and then eventually get the cross, that typically will be our tops. We see once here and once here, and then obviously that would potentially correspond, with this was our top right here, and then we had a retrace. This was our top right here, and then we had a retrace. So I would be looking at, again, the same thing right here. This is our top right here. We had a retrace. So if we do break down from this level or see any kind of continuation to the downside, and then we get that cross, that's going to look like a rejection and continuation to the downside. At which point in time, I'd start to look at like key levels, 35,000, 30,000, 24,000. We can get to those levels when we get there. But if we break down below 30,000, I will be extremely bearish on crypto. And then if we just switch over to our Bitstamp chart, very similar, but we see obviously that the 200 simple is still blue, so slightly more bullish, but we do get more false signals with this. Overall has a bullish bias in the sense that, institutional money and people that trade futures don't give a damn about crypto. They only care about money. And, obviously this trades on the weekends. So any extra bullish action is probably going to happen on the weekends when the cult pumps up the price. So that's why, naturally, this is going to look more bullish. Now, here we see, though, on the pushback up, that we actually never even made it up to the 200 exponential, let alone the 200 simple. So it is definitely a possibility that we see a push up to 46 or possibly as high as 50,000 without even changing anything that we're looking at here. Momentum is obviously in our favor. We did get the hard sell signal and breakdown from the bullish control zone already, though. So we're kind of getting a mixed signal from both these. I trust the futures chart much, much more, as it has given us 0 false signals and has been 100% accurate based on my trading strategy, as where we have seen many false signals on the spot market. And obviously it is predominantly controlled by, the crypto cult and not like actual responsible investors who just care about money. And I don't mean that in a bad way. It's okay to be part of the crypto cult. I'm part of the crypto cult. I love crypto. I think it's great. There's definitely a future for it. But I'm not a cult member in the sense that I blindly just buy crypto and think it's going to the moon. I'm voting for crypto. I'm rooting for crypto. I'm a fan. I got a foam finger on and I'm pointing it up. And I hope we just all go to millions and we all just get to retire. And, I hope that happens. But I'm not betting my money on that. I put my money in responsible places. So that's how I look at it. And the distinction between, the cult, so to speak, versus actual investors. And I think sometimes I might give off the wrong impression, but I like to think that the fact that my channel is called Crypto Trend Trader and I've been making crypto videos for multiple years, that people would understand that I do like crypto. I'm mean to things when they look ugly. When the charts look like shit, I tell it how it is. I'm not just we're still going up. No matter what happens, we're still going up. Buy the dip. BTFD. No, it's just not me. I don't hodl assets down from 70,000 to 30,000 because one day they might go to 100,000. Doesn't work like that. Not for me. I take profits, I sit on the sidelines, and then I pounce like a cobra. So Ethereum still looks about the same. It looks the same as Bitcoin. I can't get excited on Ethereum at all right now. I really can't. I mean, you guys know how I feel about Ethereum. We were in, I was a buyer down here in the 80s. I was a buyer once we reclaimed these levels at 180. I was a buyer various places along the way, but we've been operating inside of this giant channel forever. And when we lost hold of that channel, and then we started to put in the parabolic, resistance lines, we broke through here. I liked it. We got our measure move to the upside. Now we're consolidating still at that parabolic orange trend line. If we break through this, we have our moving averages directly above our head. I think we easily hit 3,600, possibly even 40,000. I'm sorry, possibly even 4,000. But I think it's going to be very, very hard for Ethereum to get above 4,000. And I don't even know that we get above where we're at right now, honestly. We'll have to wait and see. But I would much rather play some of the other shitcoins that have a better looking chart than Ethereum right now. Because Ethereum's chart to me looks bad. Bitcoin dominant. But the most important thing right now, in my opinion, is to watch the Bitcoin chart and figure out what's going on. So Bitcoin dominance chart. Now, this is what I'm really paying attention to. So we know what the Bitcoin dominance chart tells us, obviously. It tells us the percentage of the crypto total market cap that is Bitcoin, and then the percentage that is everything else. So we've been paying attention to multiple things. Whenever this is in a bearish trend, whenever the 821 are across the downside, whenever the 200s are angled to the downside, it means Bitcoin is consistently losing market cap. So we've been in a bear market since, basically altcoins were created. Bitcoin is only ever losing value. But we saw here, obviously, this was our 2017, 2018 top for altcoins. So Bitcoin was at its all-time lowest market cap when altcoins were going parabolic. And then this was the bear market. Bitcoin was just gaining value compared to alts the whole way up. And then this was the bull market, losing value compared to altcoins. So now here we are crossing potentially on the weekly chart, the 8 and 21 back to the upside. And we're doing that off of triple bullish divergence off of a green descending support line with a red resistance line here at the top. So my next key area to pay attention to is a potential top at like 45%. But right now, this looks to me like a reversal is about to take place and then a reversion to the mean retest of a 200 exponential and simple. Now, we don't know that for sure. And we're going to know with various steps along the way. We're coming out of the bearish control zone. We have a hard buy signal. That's 1. We have triple bullish divergence on the weekly. That's 2. We are close to passing the 8 and 21 back to the upside. That's 3. The next thing is we're above the red slope line. That's 4. We see multiple green histograms on the weekly. That's 5. We're about to cross over the 0 line right here on the histogram. That's potentially 6. A breakout of the channel right here is 7. And then, obviously from there we could keep going. So if we look at just those 7 signs right there of 9 right now, we have 7 bullish things on Bitcoin gaining dominance compared to altcoins. And we have 2 things that are close to confirming that just haven't confirmed yet. And then obviously if this flips over blue, the slope line on the TJD TDMACD on the weekly, that's another one. If we get back above the 200 exponential and simple and their slope lines flip to the upside, that's another one. We see obviously the 200 simple is already flipping. There's a lot of other ones that can happen along the way, but we're seeing now that we're slowly just confirming one after another that Bitcoin is going to gain value compared to altcoins. Now, typically what we see is short periods where Bitcoin gains value compared to altcoins when it breaks out to new all-time highs. And then we see long periods when Bitcoin gains dominance compared to altcoins when we go into a bear market. So this tells me after a long bull market to the upside that more likely than not, we're getting ready or we're already into a bear market and that altcoins are going to get absolutely wrecked. Lots of them are going to go away. They're going to implode because they're Ponzi schemes. They're going to die because the devs are not accomplishing anything, or like, say for instance, let's just pick a random altcoin out of a hat. Let's say Charles Hoskinson. Okay. Cardano been making promises about smart contracts for, what at this point in time, is it like 4 years, 5 years now? And in the meantime, how many other projects have showed up and now have smart contracts and are no longer in testnet and they're actually functional and they're doing all the stuff that Charles has been promising for 5 years and they didn't even exist 2 years ago. So things like that, like I consider them to be failures. So is Cardano a failure? Does it go to 0? Is it trash? Next bull market, does it get to a new all-time high? I don't know, but it doesn't look good. And there's lots of other stuff like that too. Like XRP didn't even make a new high. But granted, they're in court with the SEC and they might be a security and I don't care. The technicals tell me that XRP is total trash. So we have to really watch what we pay attention to here and the actual trends and what's happening, because if this breaks out to the upside, a lot of these altcoins probably never come back. And the ones that have been making promises for years, probably don't ever go to a new all-time high again if they didn't reach one in this bull market. So things like Dash, things like XRP probably go away forever. Cardano, I think probably, stays around. I mean, there's enough cult members for like Cardano and XRP and some of these other ones. They don't go all the way to zero, but they probably never reach new all-time highs if we don't end up with smart contracts or we don't hit an all-time high this cycle or etc. So if we start to break out above 45, I don't want anything to do with altcoins whatsoever. So we still have a little bit of wiggle room up to the top of the range, probably get at least a temporary rejection. If we break out, I don't want anything to do with altcoins. Maybe like 2 or 3 in existence that I might want something to do with anytime in the near future, other than just like a scalp dead cat bounce. But this right here, the same way we look at the gold silver chart, this right here is very, very important. So tells us a lot. We just got to know how to decode it, so to speak. Total market cap, crypto cap. This to me, last time we saved the 821 cross on the weekly, and that was good. And we reclaimed the slope line, and that was good. But we also put in bearish divergence on the weekly. We also put in bearish divergence on the monthly. We also perfectly tagged the 1.618 and my target from 4 years ago. So, I mean, well, not 4 years, I should say, 3 years ago. So we have a high right here. We put a Fibonacci in place to the low right here on the crypto market cap. That's our 2018 high. That's our 2019, 2018, whatever low. And then the Fibonacci extension target, my target is 1.618. And then in orange, we do the same thing from the 14,000 high right here and the 4,000 CVD low right here. And that's our 2.618. And now we see in orange, the 2.618 is slightly above our heads. And we see in red, the 1.618 in the red box area, my actual target, why I thought that we would come back up here and retest and put in a slightly higher high. Well, now we have bearish divergence. We hit the Fibonacci extension target perfectly. And now we're seeing that same signature again. What we need to pay attention to is, do we get rejected right here? So far, this looks like a rejection. If we cannot reclaim the 8 and the 21 on the weekly chart for the crypto cap, we go much lower. We retest the lows right here, which is $1.28 trillion. And then we probably touch the 200 exponential on simple. What does that look like for small caps? What does that look like for shitcoins, altcoins? A lot of them probably go away. They implode. The space dive. For a while. Until, it rises from the ashes and goes full phoenix on their asses once again. But right now, it doesn't look good. Now, what do I like about this chart? What do I see as potential? Well, one, we were able to reverse that before and reclaim the 8 and 21 and cross back the upside and put in new all-time highs. I like that. I like that a lot. Okay, we were able to exit the bearish control zone and cross the Stochs back to the upside and go to new all-time highs. I like that. Okay, in order for those things to happen, obviously we have to start sloping back to the upside here. We have to reclaim the 8 and 21 right here. We have to put in multiple green histograms right here. And if we put in a second green histogram on a weekly, I will actually really like how this looks. Now, granted, we only have one and the week is still open. So let's not get excited yet. But if we put in 2 green histograms on the weekly, I think there's a high probability that we now are looking at a combination of divergences. We have a high right here and a higher high right here. We have a high right here and a lower high right here on both our indicator oscillators. So we see weekly bearish divergence, telling us we probably get continuation to the downside. But we will also see a low right here and a lower low right here. If this starts to roll back over to the upside, we see a low right here and a lower low right here. Once we get 2 green histograms, if we get 2 green histograms, we'll know roughly 10 days from now, 11 technically, then we'll have bullish divergence potentially, telling us that we're likely to see higher highs. And maybe we get a third drive of bullish divergence, we get a third drive of bearish divergence, and then we roll over. But maybe before that happens, we hit, $100,000 Bitcoin or something, and the bull market's not over yet. Maybe, Bitcoin is a store of value. Maybe some random trash crypto is amazing, and we just don't know it yet. Avalanche or, whatever. Who knows? But we got to wait and see how it develops. But we don't want to just say, okay, there's bearish divergence, has to go lower, bull market's over. There's definitely potential for some bullish signs here as well on the weekly. But the most important thing, though, is let's keep in mind that crypto is very, very correlated to the stock market right now. It is very, very correlated to the NASDAQ right now. And we are seeing very clear bearish divergence on the weekly on crypto, on Bitcoin, on crypto market cap. We're seeing it on, main stock indices, Dow Jones, S&P, on weekly and monthly time frames. We're seeing these things happen. So rates are likely to go up. We're possibly going to break out of a 40-year downtrend in interest rates, possibly going to break down from a 40-year uptrend in, U.S. Treasury bonds, going into a tightening phase, potentially into a recession, yield curve inversion on the horizon. A lot of things telling us that probably these things go much lower. But we have invalidation points, at which point in time we can easily switch that view around. But right now we have to keep in mind that the markets are telling us that there is a strong bearish bias, or at least neutral bias for now, with potential of heavy downside pressure. But that being said, that's all I had in mind for today. Still looking for one more group member for the paid group. It is a one-time interest fee. It's pretty reasonable. And, I'm going to go ahead and, we're close enough at this point in time, and I'm confident that I'm sure we'll get another group member, that I'm going to go ahead and start doing 3 streams a week. So do want to see your guys' input. But I think we're going to go ahead and try. We're doing a Sunday and a Wednesday late night stream or night stream, obviously from like 8 till roughly 10, 9, depending on what we're looking at, what there's to talk about. So we're doing like 8 to whatever, Wednesday and Sundays. So I think we decided we're going to do a Friday stream, and I think we're going to do it in the morning. So if it is, what time is it right now? It's 9:33 right now. So I think I'm going to do PM Eastern Standard Time. I think I'm going to do a maybe 11 a.m. stream on Friday. So that I know we have a big international community as well, and a lot of international group members. So I want to do an early stream, and I think it'll be more useful on Friday if we can kind of talk about what's happening and potential going into the latter half of the day on Fridays, and then potentially what like the crypto weekend is going to look like, because we typically see a lot of good trades on crypto over the weekend that are just for like scalps. So I think that's what we're going to do. So as of now, I think look for an 11 a.m. Eastern Standard Time stream on Friday. That could change. I will try to post up at least 2 hours in advance, like schedule the stream, or maybe the night before or something like that, so you guys can be ready for it. But do pay attention that may change. But I think at this point in time, that is the consensus. That's what people have asked for, voted for. And I think that would be the most useful, because it will spread the streams all out by at least 2 days. So we still have our Wednesday at 8 p.m. We still have our Sunday at 8 p.m. And then we would also have a Friday at 11 a.m. Now, it is possible that we could do before markets open and do like a 9 a.m. Live stream if people would prefer that. But as of now, I think it looks like probably 11. So, Eli, you can just shoot me an email, man. You get access to the 2 indicators that I just showed off here, the TJD TD Master, and then the Jewel Thief as well. That's basically like group member exclusive, like kind of thank you for people that show support. It's a one-time deal. It's pretty reasonable in my opinion, but it does help to bring these streams live all the time. And we're reaching like our next goal to go 3 days a week. So, basically filling up that last slot is essentially what we've been expecting. So I'm going to go Friday regardless, but if you shoot me an email, if you're interested, that's fine. Definitely be interested in having you. Most people have followed the channel for a while and see how effective and, how well this strategy works over time. But obviously I'll be glad to have a new member, as slowly but surely we've been branching out to some new people. So, but yeah, I think that's going to do it for today. M. Hoff says, it does. Thank you for sure, brother. Glad to answer those questions for you, of course. And then Eli says, this was the first year I held my spot and just hedged with futures until things even out. Yeah, man, that's definitely one nice thing about futures. And, it'd be nice to see potential ETF and, a little bit of regulation in the space and everything. We could see some, I would like to see crypto traded and regulated and treated more like a legit asset, you know, to protect people. And I would love to see some of these like scam things get like shut down, like the YouTube fake streams, and you know, the amount of people that get scammed for a Coinbase account. And I would love to see the actual exchanges not crash when they have like a Super Bowl commercial or during like times of volatility. Like if you're going to be a multi-billion-dollar company, Coinbase, I think that probably you should be able to do the one job that your company does, which is allow people to buy and sell cryptocurrencies. You know, that's where 99% of your revenue comes from. So you should probably be able to like function during high volatility times. But, you know, maybe that's intentional and they want to do that on purpose. But regardless, yeah, shoot me an email, man, if you are interested. If anyone else is interested in, well, obviously, it is an open invitation. But that is going to wrap it up for today. So remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. If you're watching this live or later on the stream, you know, static, and you would like to request any assets or anything, tune in for the stream. Feel free to ask or leave them in the comments, you know, or whatever afterwards, and I will try to get to them. There's a bunch of free indicators listed down below. If you don't want to join the group or not financially in a position to join the group, feel free to use those on TradingView. Also have my chart set up on there as well that you can have free access to. Yeah, that's it for today. So it is 9:38 p.m. Eastern Standard Time. I am Crypto Trend Trader, and we're going to go ahead and wrap it up there. Appreciate everybody tuning in today. Remember, most importantly, take care of your family, take care of yourself, protect your capital, and you know, there's always another trade. So let's not worry about if we miss a big move to the upside or downside. Most important thing is just protecting what we have, because we got to have money to make money. So that's it for tonight. And yep, I will see the group members after this and post up the stream there. But that's it for today. Eli said, good deal. Reach out via email. Appreciate it. Following along for a couple years after coming across the TurboJDiesel a while back. Oh, awesome, man. Awesome. I didn't realize. I thought you were new to the stream. I'm not sure. I know we've had an Eli or two before, but I didn't recognize the name. Caught my first live stream today. Okay, that's probably why then. Okay, great. Well, glad to have you, brother. Well, hopefully you'll be tuning in for some more live streams. And obviously, you know, if you've been around for a while, you can appreciate a little bit more the consistency and success that the strategy has as well. And, you know, obviously all the content and, you know, obviously none of it would have been possible without the support of all the people that have made contributions over time. So I do appreciate it, and I look forward to hearing from you. And that's it for today, Crypto Trend Trader, and I'm out of here.